Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. Hopefully, you're all having a smashing Sunday. This is going to be quite a in-depth, or I should say, jam-packed daily cryptocurrency market update because there's a lot to cover. You know, what are 24 hours? In fact, what a year it's been for the cryptocurrency market. And I've struggled to liken the past year that we've seen to any other. Certainly in my 6 years of being here, maybe 2018, there was a similar sort of level of onslaught. But I'd argue that this one has been a lot more significant, certainly from a monetary policy side of things and an internal sort of crypto combustion side of things as well. But we're going to try and cover it all. So what are we going to be going over, guys? We're going to be looking at the USDC situation, which seems to be stabilizing. We'll be talking about Bitcoin, of course. It's very interesting. We're going to be bringing up Silicon Valley Bank and essentially the impact that I think this is going to have more broadly. Because Silicon Valley Bank, of course, went down. We know it had a link with crypto in the form of the $3.3 billion that Circle held with them to back their USDC stablecoin. But actually, there's a kind of Silicon Valley is a microcosm of the potential dangers of what can happen on a larger scale if the Fed don't rethink the direction that they're heading on. And this is something I've often speculated on. It's one of the reasons why we put money back into the markets at the start of the year was because I essentially said, look, I don't think the Fed's got too much further to go. And you know, February showed a little bit of a sticky period with that decision because, of course, we had stickier inflation, interest rates going up, and this sort of implied that the Fed were going to be a lot more aggressive. I don't think they actually can be, and I think Silicon Valley is showing them this. And of course, they have called an emergency meeting tomorrow, and then we've got the CPI on Tuesday. What a week it's going to be, guys, moving forwards. It could be explosive, certainly if we get that lower CPI print, and certainly if we get any sort of revelations out of this that may hint towards slowing down or a less aggressive Fed. Remember, we've seen for this meeting coming up in the 22nd go from 25 basis points to 50, and we've seen implied rates go well over 6, having started February off sort of just above 5. So there's a lot going on. So we'll be discussing this, looking at a tweet from Lynn Alden. I was going to go through this tweet from Jim Bernanke, but I don't think we're going to have time. And also, we've seen the likes of the Bank of England come out and say they're going to basically look to help this situation. We've also had US discusses fund to backstop depositors if more banks fail. So again, this is what I think is making the Fed kind of, you know, double think things. We won't go into that. So yeah, let's try and get into it all, guys. First off, USDC is back at 95, nearly 96 cents, having traded all the way down to, I think, 89 cents. And this, of course, is after Circle to cover any shortfalls in USDC reserves, sparking stablecoin rally. So there was a lot of panic yesterday, and it's always better to sort of let the dust settle before you make a decision, because there have been lots of people that would have abandoned their USDC, you know, at 89 cents or 90 cents, only for it to eventually come back to $1. I do believe it will. And I do think that, you know, if you look at what's sort of going on, people are now saying, and certainly the Bank of England and other banks saying they're going to come out and sort of cover this, you know, pick up the check, which means we do as the taxpayers, that this issue will get resolved. So this is, we'll keep monitoring the situation. Of course, MakerDAO will be slightly up on this, as MakerDAO has collateral in USDC, which is why it went down yesterday. But this situation seems to be stabilizing. And this is, you know, and I said this yesterday, it was a large sort of part of the video was me expressing the fact that I'm actually bullish here. You know, I think that the decision we made in January was not a bad one. For me, the decision was very simple. Now, is, in my opinion, as somebody that wants to be a crypto investor, was back at that sort of 15, 16 K level, an opportunity for me to put some money back into a market that I want to be accumulating over a long-term time horizon to appreciate it as it comes into its own. And I still stand by that. And I'm still bullish despite all the negativity and news. And actually, the fact that we're getting, you don't really want to buy things when everything's rosy. You want to take advantage of fear and panic. And given the kind of fear and panic that we've seen, you would kind of almost have expected the price to have made a new low by now. And I think this market can turn around very quickly, certainly going into the CPI print. And we're going to see what unravels with the Federal Reserve tomorrow. Because the sudden collapse of FDIC seizure of SVB Group on Friday may have prompted the need for this meeting from the Fed. So this was interesting from Lynn. Lynn did a great piece actually called How the Fed Went Broke. The Federal Reserve cumulative operating losses are now 39.7 billion, which they recorded as deferred assets. In about 2 more weeks, they'll have a negative tangible equity. If you factor out those deferred assets, this is very interesting. So it's talking about this. This is why I don't think the Fed have much runway to go. We've already seen the debt ceiling come into question. They're just going to up that. That's going to devalue the debt underneath it. And it's almost going to be counterintuitive to their restrictive policy. So when does it get to the point where the interest rates they're doing are just more harmful than good in terms of bringing inflation down? She then goes on to say their unrealized losses are way bigger than that, but unlike normal banks, the Fed can't be forced to sell a realized loss. And if they do realize a loss, it's like a bank. It's like the bank in Monopoly. And then she goes on to say, what if the bank goes out of money? Some players think the bank is bankrupt. If the bank runs out of money, the bank never goes bankrupt. To continue paying, use slips of paper to keep. So this is the thing. It's a monopoly, but the system is coming into a lot of strain based on what they're doing. So I think they're going to revert. We've seen some interesting forward-looking interest rate pricing. We certainly saw the yields take quite a dive. We did look at this actually after highlighting the divergence that we had on the weekly and how there's some similarities to previously. So if this continues to roll, it means that pricing for interest rates are coming down because this is what the Fed funds follows the 2-year yield. So it's going to be a very interesting a lot of times with markets and speculating on them, you just have to wait for data to come in and see how the market reacts to make a decision up. So this week is going to be pretty significant with the CPI. It's going to be interesting to see how this reacts. Certainly the dollar. This keeps rolling. Crypto is likely to go up. And certainly if the CPI comes out lower, certainly if we get anything from the Fed meeting, and it does look like the UK and maybe the US are going to step in and try and help the situation, not let it get out of hand with Silicon Valley. So things very much, after a traumatic week, seem to be stabilizing. So the game for us as crypto investors is really just watching and waiting. You know, I'm still bullish. I do think we see upside. I think that this structure was somewhat foretold. I would have liked to have seen a less aggressive right shoulder, but I don't get to decide. And we'll see what happens here. You know, this is still very much a structure that we're looking at, and we'd like to see something like this take place because I think you'll come and fill 30K in no time, certainly if the data supports that. But it's a case about watching and waiting. And as far as the Fed's concerned, this sort of talking tough that they're doing, I don't think necessarily is the reality of what they can do. I think they're already under a lot of stress. You know, it's the problem with bank runs in a situation where there's like a restricted liquidity is it gets ugly pretty quickly. And we've already seen huge contagion just from Silicon Valley Bank. What happens if it's one of the big ones? Even JP Morgan were tied into this. Even Circle. Our own space was involved in this. But if the dust can settle here and come out positively, I think actually you could be in for a real explosive end of the month for crypto. Providing we get the data that we want. Just a little bit of interesting news now. 12 days ago, SVB insiders, so the CEO, the CFO, and the CMO. The CEO sold 11% of his holdings. The CFO sold 32% of his holdings. And the CMO sold 28% of his holdings. There should be a way that we can track this because if you get this kind of price action, it's like with last year, one reason that we brought up for maybe not being so bullish on the markets was because Larry Fink sold his shares. When the people at the kind of helm of these institutions sell their shares, it's usually because they think they're not going to do too well and not because they need like a fifth home or something along those lines. So we'll see. Circle situation seems to be stabilizing. There's going to be some interesting things to come out of Silicon Valley Bank and how this is going to maybe steer or shape the Federal Reserve. You know the markets to watch, guys. Of course, Bitcoin. Look at your 2-year yields. Look at your US dollars or your DXY. And also keep an eye on the S&P. I do need to do some analysis on the S&P because it has come off hard, but there could be some sort of a sort of adjusting here. And looking for that continuation. This market can turn around very quickly on lower inflationary number, and certainly any kind of indication that the Fed is going to look to stop what they're doing in some kind of a pivot. And we've looked at a pivot and how a pivot actually isn't bullish because usually it comes under extreme circumstances. Could be the case here, but something that we'll keep an eye on. So that's largely all I've got for you this video, guys. A lot going on. Get ready for next week. We've got the CPI We've got a number of sort of miscellaneous data as well, but it's all going to impact the markets. And again, keep an eye on the 2-year yields for sure. All I've got for you in this one. If you enjoyed the content, like us, always appreciate it. So as a comment, and I'll see you in the next one. Thanks a lot for watching, ladies and gents.